because they said, look, the 1% is making all the money, and we had the Occupy protests, and there was a lot of media attention surrounding it. But if they can spin that and say, look, it's going to be the creditors. We're going to get those rich people, and they are the 1%, and this is how we can basically spin this around and take from them. And it will be those who are more wealthy.
50 million Americans went without power in the summer of 2003 for just a single day. The results were stunning. 3,000 fire calls were reported, many from people using candles. As a result, several people died in Michigan, New York, and Canada. The New York City Fire Department alone answered over 7,500 calls. More than 80,000 people called for help in just over a 24-hour period in northeastern America. Blackouts could be coming very soon to North America. Learn more at futuremoneytrends.com/92.
Hello, everyone, and welcome into CrushTheStreet.com. I'm joined today with David Quintieri of The Money GPS. His book that is available for purchase is The Money GPS, and he's not your run-of-the-mill talking head on CNBC. There is no filter, and he exposes the geopolitical and financial news for what they are. And you can find him on YouTube conveniently under, once again, The Money GPS, and his website is themoneygps.com. David Quintieri, thanks for joining me.
Thank you very much for having me on.
David, we've had a few discussions on this platform discussing things like the New World Order, global currencies, warfare in the Middle East, and maybe we'll touch on some of these things today. But let's start off here. The debt to GDP here in America is currently at 104%, over 100%, really a tipping point there. Now, we've seen China run up their debt to GDP to roughly 300%, a 150% increase over the last 10 years. It really ramped up. Now, when you look at the chart of our debt from 1971, when we were completely taken off the gold standard, it's gone up parabolically with GDP only steadily rising. GDP has gone up, but for each dollar we go into debt, we are seeing a smaller and smaller return on each dollar we go in the hole with here. So my question is this: do you see the U.S. possibly shifting courses here and taking the debt to GDP under 100%, or are we on our way to 300% like China?
It has to go up. That's the only direction possible. The goal of the monetary system is to continue to expand. Now, most people would think that this expansion would be a positive thing. But in this case, it's a very negative thing. So we look at the percentages around the world, and you find a country like Greece, for example, and they have a very high debt to GDP ratio. But you look at a situation like the US, which you said it's around 100% debt to GDP ratio. And as far as I'm concerned, 100% is officially impossible to pay back. But then you include the unfunded liabilities, which I'm sure many of the viewers know about. And there are many different calculations. People argue about what the actual rate is. It doesn't matter to me. All I care about is the fact that it's gone way beyond what could ever be possibly paid back. It's mathematically impossible. So you look at any country really, and they've all gone past that point of no return. So how will this system ever be mended? How will we ever reverse the trend? How will we ever be able to actually go in, fix the problems, and return to a steady pace of economic growth? And the fact is that we can't.
Well, I want to ask you about kind of a breaking point and shifting our focus to China here. And China has been the success story all around the world for the 21st century, as you put in one of your recent videos. Now, their growth is now being questioned. How unsustainable is China, and how much of a shock will be felt throughout the market as they continue to falter? And just to remind the audience, when we were seeing some pretty volatile markets, when we saw Cyprus and Greece go through the headlines. Now, what's going to happen if China starts to grind to a halt here? Obviously, a much larger percent of GDP, global GDP, a much bigger player in the global markets here.
Well, China is obviously very important, and one of the indicators I look to see this, the growth here is the imports and exports. When we see China, we need to understand that you have so many people that are there that need commodities, and these are simple supply and demand fundamentals. So you need things like copper, you need lumber, you need all of these different resources that are available from different countries around the world. Now, obviously, if China can get a certain thing from their own country, perhaps they'll do that. But in many cases, they consume too much. They're not able to mine this or that, so they have to import from other countries. So we can look at the import and export numbers and really gauge how well China's doing and use that same principle to apply to other countries around the world. China right now, and you can see this statistically, it's not any form of, no consideration needs to be taken. You just look at the charts, look at the numbers, and you can see they're hurting economically. And we know that the government has taken some pretty serious steps in order to improve growth in China. One of the things they have done is relaxed the lending standards in China. And they've done this to get people to borrow. It's no different than what happened up to the financial crisis. If the person doesn't have no income job or assets, well, then they got a perfect loan for you to buy a home. And the exact same thing is happening in China. China's also introducing their own stimulus into the stock market. So they've been buying up shares of the stock market through subsidiary corporations. This is the kind of thing they'll only do when they are desperate. And they've been doing so. And this has not been successful because you can see the growth declining. Many people will say that, yes, in fact, the growth in China is increasing in terms of the fact that, look, year over year, they're having, let's say, 7% growth. But when you realize it, they've actually gone down significantly over these past years. So where is the future for China? Well, I do see ultimately, yes, down the road, there's going to be more growth. China will continue to grow, but along the way, there are going to be hurdles. There are going to be many missteps.
So do you think that these missteps will be just panic of the week type news for the markets, and then they fix it with some sort of extended stimulus and just kind of keep this thing going as long as they can, ultimately just kicking this can down the road? Essentially what we've seen year after year with what happened with the 2008 crisis, what happened, in the tech bubble in the early 2000s, just this ongoing kicking of the can. And, is this what we're seeing here with China? I mean, 300% debt to GDP. I don't know how far you can take that.
So what I have noticed historically and currently, basically, you have a country like China who is engaging in the exact same policies that all of the other countries around the world are, and that is the expansion of debt. So what we can look forward to is the exact same thing that happens every single time. Now, they introduce these policies, let's say QE, and we can expect QE to have less and less of a pronounced effect every single time they do it. See, they print more money to get less of an effect. And eventually, it has no effect on the markets, so they'll have to ramp it up even further and even further. This has happened so many times in history. You can see why in the world would a country, maybe it's Weimar Germany, maybe Zimbabwe, Yugoslavia, whatever, where they have gone to the point, let's say Weimar Germany, something like 5 quadrillion marks a day. Why would they get to that point? It's because it had less and less of an effect, so they had to ramp up the printing presses to the point where essentially that's it. They give up when it's worthless. And the exact same thing happens every time. So they'll have to buy more shares of the stock market. They'll have to print more money. They'll have to do QE to infinity. They'll have to do all of these policies of stimulus and TARP and all the things that they've done. But it will have to be to an extreme rate simply because of the fact that it has such a weak effect as time goes on.
David, the official unemployment rate here in the States looks rather good. If you were just to read the May report, the headline here, 5%. Now, we are at 94 million people not in the labor force at this point, a really high number. And you recently did a video that clearly showed that 1 in 6 young men are either unemployed or in jail. Now, I want to ask you about this specifically, and that is, does having a poor young person population perpetuate the economic downturn?
The short answer is yes, it does. And what we have here is basically an end to what has happened in previous generations. We need a lot of young people. We need basically economic growth. That's at least what the governments are saying. We need economic growth, but you can't have that when you have a young population that's either unemployed or incarcerated. And this is what we have to deal with for the foreseeable future. There's no reason for anybody to be employed right now or to have basically a whole lineup of jobs coming because, quite frankly, there is no prospects here. There's nothing good. All the manufacturing jobs are being shipped overseas, and you have a whole bunch of conditions that are worsening. They're on a worsening trend rather than an uptrend. That's where I see it all heading. And specific to the unemployment rate, it has no significance to the economy. You just look at it and it doesn't take a genius to figure out the fact that if you wipe people off the statistic after a year, that somehow defines them out of existence. That to me doesn't make any sense. To look at the civilian labor force participation rate, that's a better indicator. Of course, the numbers are still manipulated and skewed, but at least we get a better picture. So I definitely recommend that.
So would you say that, and I don't have statistics on this, but would you say that someone who is unemployed is more likely to commit a crime and go to jail and then be more of a burden on the taxpayer?
Now, before I say exactly what I think on this, I don't think it means that an unemployed person is necessarily more likely to be a criminal at all. But statistically, it is true that those individuals who are unemployed are more likely, and that's according to the statistics. I believe I read that through the book Freakonomics as well as Super Freakonomics, so they break it down. So it is factual in that sense, but it doesn't necessarily mean that unemployed people are worse off or something like this, but unfortunately true.
Well, I guess you could say that there's a portion of the population who are going to commit a crime, who may not have an issue committing crimes, and if you put them in a situation where their back is against the wall, they are likely to commit the crime to get what they need and to do what they need to do. And maybe if they weren't, or if they didn't need to commit a crime or didn't have to steal, didn't have to break into a car because they had a job, they're busy producing, they wouldn't do so. Now you put them in a situation where their back is against the wall, now they're likely to commit a crime and they go to jail, and again, more of a burden on the taxpayer. David, I got to ask you about fiat money. Fiat money is money that has been decreed by the government. The government says it is a legal tender, and that is it. That's the only value it has. There's only faith and confidence that the paper will store the hours of sweat and hard work that you've poured into it to have some stored economic value for the long term. Now, people are worried about their gold being confiscated, but how worried should people be of their wealth being stolen either through inflation or something like a bail-in, which could both be used to pay down reckless debt that is spiraling out of control? So, one of the most important things to realize about what I teach completely is one of the most important things is that the bail-ins are coming. They will steal money from us in a direct way. Now, it's going to be different methods here. If you look at
Cyprus, that's the ultimate plan, is to go into the bank accounts and take money from individual savers. But there are other instances, like in Austria, where we have a similar situation. However, this was extended not to the bank accounts, but to creditors, and they had their wealth stolen. It's the same principle. It's a bail-in. I mean, they used the term bail-in while they took their money. And then you look at even, there was a few banks in Italy that had a similar situation. I haven't dug deep enough into it yet to provide a video to the public yet, but I will, so stay tuned on that one. But essentially, we have a similar situation in Italy. Now, all the G20 nations met in Brisbane, Australia. If I'm not mistaken, that was 2014. And they decided that the bail-in would be the new strategy, that they would not use bailouts, and they would instead use bail-ins. This is a publicly accepted principle now, a policy, that will be coming to each individual country. It will not happen necessarily all at once. It will not happen in the exact same way, but it will be implemented in this way. So your money is completely unsafe in the monetary system. Now, of course, to one degree or another, we're all connected into it. But the further away you are able to be, the better off you are.
Man, a bail-in is just so much harder of a pill to swallow, I think, than just inflation. And I'm shocked that the governments would just resort to that than just inflating away people's purchasing power. What are your thoughts on why they're resorting to bail-ins versus just printing money?
Bailouts were very unpopular because they said, look, the 1% is making all the money, and we had the Occupy protests, and there was a lot of media attention surrounding it. But if they can spin that and say, look, it's going to be the creditors, we're going to get those rich people, and they are the 1%, and this is how we can basically spin this around and take from them. And it will be those who are more wealthy, which are affected first. So perhaps it would be anyone who holds over $100,000 or 100,000 euros, let's say, in their bank account. We're going to take a percentage of that.
Wow.
So any percentage above 100,000, we're going to take, I'll just make something up, 10%. So the average individual probably doesn't have 100,000 in the bank. So the average person will say, you know what, good. Let's take from them. They're the rich people. They have all that money. But of course, those are the small business owners. Those are the people who are buying things and bringing really, they don't necessarily take as much from the government. They don't have as much of the social assistance programs. They're not taken from that. These individuals are often, in cases, productive to the economy. Well, now that gives the incentive, that gives the go-ahead to begin. Okay, now it's $75,000 in the bank, and now it's $50,000. Now it's $20,000. Okay, now it's everybody. You know, we have a major situation. We 5%, 10%, 20%, whatever it might be. So it basically gives people the opportunity to actually vote in, opt in to this process of the bail-in, and actually allow it to happen while they cheer on.
Wow. David, I couldn't have wrapped my mind around that better than you just explained it right there. The way they're going to package this for the mass ignorant population is by painting a bad picture against the 1%, which they've already do currently. So I guess my question is, and maybe it's just obvious, what is more of a risk, cash confiscation or gold confiscation going forward?
Personally, I see them not necessarily confiscating either, but I've really sat down and thought about this, read a lot about this, and I don't see them confiscating gold, precious metals at all. If you are concerned about that, of course, for example, with silver, you can get the junk or common coins that is historically they obviously haven't done that. And the gold, I mean, you can get into certain cultures like to get into the 22 and 24 karat gold jewelry. That's something else to look into. There are other ways to really be concerned about it at all, even though I don't think any of it will be taken from us. But even the cash itself, I mean, they have the entire system working towards a cashless society. So, in effect, yes, the paper dollars could be confiscated in that way, suggesting, look, the paper system is compromised. They can say that the dollars are able to be ripped off, and we suggest that you use your new digital currencies, or even your let's say debit cards or MasterCards or Visas or whatever have you. Use those because those are the only currency which is working now. And, they can create a scheme and essentially force people onto a paperless system. Either way, I would say, it is beneficial to hold on to precious metals regardless of that. So it is beneficial to have at least some. A lot of people would say that they believe that the price is going to go down to, I don't know, whatever, so many ounces. It's going to go back to 20 years ago and this and that. As far as I'm concerned, it's something that you hold wealth in to pass on generation to generation, and is not something that should be purchased and gambled upon and sold off. It's something that you hold on to and pass the wealth down generation to generation.
David, if you wouldn't mind sharing, why do you believe that there is a small to zero chance of there being gold confiscations if we have seen that in the past? I mean, what is the speculation that you believe it won't happen going forward in the future?
There are a few things that I've thought about, but number one is that the monetary system, the stock markets, the bond markets, everything interconnected with that is all controlled entirely by essentially a few people or a few corporations, if you want to think about it. And we know this specifically because they had to pay, there was a lawsuit about the silver price fixing. It was an admitted fact that a few corporations were coming together every single day and deciding what price that they would put for silver. So we know that. We know it's manipulated. It's an admitted fact. Now, what's stopping them from doing the exact same thing and shooting the price down into the ground, or significantly lower than where it is, to shake out all kinds of people? If the price went down, and I'm just throwing a number out there, by 90% on gold and silver each, you don't have to worry about people wanting to sell off what they have. They're going to be running to the jewelry stores, back to their precious metal suppliers, and they are going to be selling off because, of course, most people are just following a trend. I mean, there are a few people out there who know what they're doing, who are using this as part of their portfolio. Excuse me. A few people know what they're doing. But the truth is that many people are just using it in order to make a profit. If they see the price sinking month after month after month, they start sweating. And they will give their gold back and exchange it for the fiat currency. And this is something that has happened before, not just with precious metals, but any asset in its boom and bust cycle. So the same thing could happen again. We know that the prices are manipulated, they have full control, and there's nothing stopping them from applying the same policies again.
So, David, I want to get your thoughts then, kind of in conclusion, on precious metals and what we've seen here in 2016 and how it relates to the manipulation that is going on, as you pointed out, as you clearly pointed out. Do you think that there's any legs to this bull market that we've seen in gold and silver here in 2016, with them both just hitting 52-week highs after 52-week highs? Obviously, we've seen it take a breather here, but still pretty pretty substantial moves in precious metals and, you know, in the mining sector for that matter. So what are your thoughts here, and how it relates to manipulation, and do you see it continuing forward here, or is the cartel going to take it back down?
What I have noticed over the past few years anyway is that the S&P 500 and the Fed's balance sheet are in direct correlation. The times where they have introduced QE, we can see the stock market move in direct correlation. As soon as they cut off QE1, for example, the market traded within a range. They introduced QE2, and then the stock market continued to rise. As soon as they stopped QE2, the market traded in a range. And the same thing happens. So we know specifically that the stock market, give or take, will go in accordance to the Fed's balance sheet. That's a documented fact. We know that. Now, these statistics, the stock markets, S&P 500 and the Dow Jones obviously being very critical to the whole globe, really shows the other markets where it needs to be. Now, they don't trade exactly in line, but other stock markets are sort of following the US. Everything sort of follows the US, not just the US dollar, but the markets as well. But if you take a look at what's happening with precious metals, now, I've looked into the numbers, and if you look at just the price, it seems a little bit unusual where it has gone in relation to the US dollar, in relation to the US stock markets. There have been many times in there where historically you would say that doesn't make a lot of sense historically. So what I have noticed that we need to understand what made the price go up, what made the price go down, as you suggest, maybe a manipulation. Now, look at the paper side of gold or silver. This is where all the action is. It is my belief, and this is not a popular belief, but the price of the physical metal has nothing to do with what we see as the spot price on your screens. People today are more enthusiastic about physical precious metals than they ever have been. In fact, year over year over year, there's been more demand for physical precious metals. So why isn't the price in line with that? Well, clearly something else is going on. You look at the paper markets, and that's where the activity is, because there are funds purchasing or wealthy people purchasing large quantities of ETFs. This has been a booming business over the past few years. It is in the paper markets, the futures, where the corporations, the big corporations, are buying into this. And that's causing the price to move up and also to move down. The manipulation comes when they can sell precious metals that do not exist. Literally, these precious metals do not exist, sell them onto the market in order to push the price down. That's what's happening with JP Morgan and others. And then you have on top of that, where the admitted fact that they have purposely, intentionally decided what the price of silver to pay, and had to pay a little slap on the wrist fine to, to say, oh, we promise we'll never do that again, which I'm sure no policy has been changed at all on that. Regardless, we know that these prices, as far as I'm concerned, they don't line up with the physical precious metals. But you as an individual investor should never be worried, never be swayed or deterred about what price you see on those screens. What day is a good day to buy precious metals? Every day.
David, that's incredible advice right there, and I do hope people take what you said to heart. The facts are clear, and the system is painted and rigged against the common person. And if people aren't careful, they are going to be led down the road for the slaughter and be controlled and manipulated by the elites that are in power. So David, on that note, if people want to learn more about what you do, where would they go and what would they find?
Sure. If you want to check me out on YouTube, it is The Money GPS, and you can find me there. I post videos practically every single day, and it ranges from the basics, what is a bond, what is a stock, and it goes all the way into the manipulation. So it's pretty much good for everyone in between that. And if you want to get some other types of information, you're looking for, maybe the free ebooks that I have, you're looking for my free e-course that I have. All of that information is at my website, which is themoneygps.com. And then, of course, the book that I wrote, The Money GPS, is available on Amazon as well. And that has all kinds of very simple diagrams, like cartoon type diagrams, to explain the monetary system. So I took it and almost made a joke of it to explain how simple, in a way, when you really break it down, really get rid of all that complexity, how simple this monetary system.
David, again, thank you so much for coming on the show with me today. I hope to have you back on in the near future here.
Thank you very much for having me on.